Bonjour, people! Today I'll try to explain whether or not cryptocurrencies are a scam and why are people afraid that they might lose their money because of a scam. So buckle up, I'm going to answer this question. Before we head on to this video, make sure you subscribe to my channel and give this video a thumbs up. Also, do follow our socials. First of all, let me give you guys a quick overview of cryptocurrency. A cryptocurrency is a unit of currency represented by a virtual encrypted data string. A peer-to-peer network known as a blockchain monitors it and serves as a secure database for transactions. Cryptocurrencies are decentralized, which means they are not issued by any authority, providing the owner's power and accountability. It was released by an anonymous programmer named Satoshi Nakamoto in 2008, who also developed the first ever blockchain. There's a fixed number of Bitcoin that can be mined, which is 21 million. The current price of Bitcoin is $42,313 US. Is cryptocurrency a scam? Some people see cryptocurrency as the future, whereas some see it as the destruction of the world's economy and still think that cryptocurrency is a scam and are afraid to invest in it. It's human nature to be fearful of new technologies. Thinking back to the 1830s when the train was first invented in Britain, frightened passengers thought that taking in steam fumes could kill them, or their eyes would be harmed by adjusting to its speed. Those feelings of fear didn't work out as expected, which brings up one of the key tenets of investment success: accepting new advancements while others stay distrustful. In addition to the fact that one's worst assumptions only from time to time seldom don't come to be true. However, such advancements could be years or even decades ahead of relevant regulations, giving investors a sufficient period of clemency. How about we see the reason why it's vital to remember this idea for the rising blockchain industry, particularly for Bitcoin and Ethereum? The best analogy to cryptocurrency is that of gold and silver. Both have substantial key worth because of industrial applications, the buying of labor and goods, use in making adornments and accessories, etc. In any case, these uncommon metals additionally have intangible major worth. Cryptocurrencies themselves additionally have substantial key worth. For starters, blockchain technology and cryptography solve the double spending problem with unencrypted digital currencies. That is, anybody can recreate a progression of codes, guarantee it as currency, and spend however much they need with practically no confirmation. Additionally, cryptocurrencies' intangible worth lies in their often limited supply and decentralization. Several Americans simply don't trust the Fed since it has the privilege of issuing as much currency as it wants, especially after it printed 40% of all US dollars in existence last year to combat the COVID-19 pandemic that led to high levels of inflation. So, alternatives to fiat currencies, Bitcoin have turned into captivating choice. It's a consensus everywhere that gold and silver are not scam commodities. However, a little-known fact is that the supply of gold is 100 times greater than the amount physically in use. 99% of the commodity is stored for purposes like an inflation hedge. The same can be said for cryptocurrencies. A tiny measure of their float is utilized as a medium of exchange, but their limited supply and scarcity play into investor psychology of assurance against inflation, just like commodities. Subsequently, we can conclude that there's nothing out of the sorts about these digital forms of money themselves. However, critics are only thinking of a reason to deny the technology. If we look at the prices of cryptocurrencies in the last decade, we see that investors are continuously investing their money in different coins. For example, the price of Bitcoin in 2014 to 2016 was around 440 to 450 USD, and the current price of Bitcoin is $41,879. Similarly, the Solana was below $1 from its launch until July 2020 and spiked at the $2 level in January 2021. The current price of Solana is $138.62. As more and more investors and business tycoons are showing their interest, it proves that cryptocurrency as a whole is not a scam. However, there are a lot of scams related to cryptocurrency. Scams related to cryptocurrency. Scammers took home a record $14 billion in cryptocurrency in 2021. Losses from crypto-related crime rose 79% from a year earlier, driven by a spike in theft and scams. Scamming was the greatest form of cryptocurrency-based crime in 2021, followed by theft, most of which occurred through the hacking of cryptocurrency businesses. Let us discuss a few types of cryptocurrency scams. Phishing scams. This kind of scam is pretty much as old as the internet, but with crypto, there are a few new implications. Similarly, As an ordinary phishing attack would work, scammers send emails attempting to bait recipients into clicking links and inputting their details. Phishing scams target data related to online wallets. In particular, scammers are keen on crypto wallet private keys, which are the keys needed to get to assets inside the wallet. At the point when the hackers have obtained this data, they can steal the cryptocurrency contained in those wallets. But unlike most passwords and usernames, you only get one private key to your blockchain wallets. This is your important for blockchain decentralized plan, guaranteeing that one element can't handle your data, but it poses an issue if you ever need to change your key. DeFi rug pulls. DeFi rug pulls are the most recent sort of scam to hit the crypto markets. DeFi intends to decentralize finance by eliminating gatekeepers for financial transactions. As of late, it has turned into a magnet for development in the crypto ecosystem. However, the improvement of DeFi platforms has its concerns. An easy way to scam excited blockchain newbies is to get them to purchase the kind of recently minted coin or token for a game. If enough people drive the price up through supply and demand, this allows the original scammers to sell all their holdings and disappear in a move known as a rug pull. Unlike ledgers for federally regulated currency, there's no such thing as fraud protection or FDIC protection on the blockchain. At the point when your cash gets taken on the blockchain, the best way to get it back is for the recipient to pay you back directly. And while mainstream crypto exchanges have better fraud security measures than lesser-known exchanges, there's still no assurance for investors to recoup stolen crypto. Giveaway scams. Now, let us drop down the sphere of influence. Scammers likewise attempt to act like well-known celebrities, business tycoons, or cryptocurrency influencers. To catch the consideration of possible targets, many scammers promise to match or multiply the cryptocurrency sent to them in what is known as a giveaway scam. Well-crafted messaging from what often looks like a valid social media account can often create a sense of validity and spark a sense of urgency. This mythical once-in-a-lifetime opportunity can lead people to transfer funds quickly in hopes of an instant return. For instance, on March 31st, 2021, there had been reports of more than $2 million in digital money moved to Elon Musk impersonators. As indicated by the FTC, 14% of revealed misfortunes to imposters of different kinds are currently in digital money. Cryptocurrency investment schemes. New types of crypto are continually being minted, and when new coins hit the blockchain, it's known as an initial coin offering, ICO. In any case, ICOs are additionally open doors for scams. Profit-seeking speculators turn to misleading websites offering insured returns or different setups for which investors should put away huge amounts of cash for considerably bigger insured returns. They may then pressure you into storing a lot of new coins into a digital wallet that has been compromised in some way, or pump and dump by purchasing up the coin and selling it when the cost explodes. While funds flow freely internally, these false assurances frequently lead to financial disasters when people attempt to get their cash out and see that they can't. Romance scams. Dating applications are full of crypto scams. Scammers frequently use dating sites to cause unsuspecting targets to believe that they are in a real long-term relationship. At the point when trust has been built, conversations often turn to lucrative cryptocurrency opportunities and the eventual transfer of either coins or account authentication credentials. As per the FTC, around 20% of the cash was lost in romance scams from October 2020 through March 2021 was sent in the form of cryptocurrency. Red flags for crypto scams. For starters, watch out for some common red flags. Promises to multiply your money. Scammers guarantee that you'll make money. If they promise you'll make a profit, that's a scam, even if there's a celebrity endorsement or testimonials. Promises of free money. Scammers promise free money. They promise it in cash or cryptocurrency, but free money promises are not real. Vague details about where your money is going. Scammers make big claims without details or explanations. Smart businessmen have to understand how their investments work and where their money is going. Good investment advisors always share that information. Other red flags include contractual obligations lock you into holding crypto without being able to sell. Psychological manipulation like blackmail or extortion. Large social media crypto schemes. Typographical in emails, on social media posts, and during any communication. Cryptocurrency is not a scam. It is the backbone of the future world economy. This was my overview of it. Do tell us about your opinion in the comment section below. Kudos!